and they earned right to this loan product. And so as a professional, if you're not taking that serious and understanding the nature of the VA loan, what it can do, what it can't do, what it might be able to do, depending on the circumstance, then you're doing them a disservice. They've earned a thing. Don't become the problem or the reason why they don't get to have the thing because you failed to prepare, right? That's the most important thing. I think understanding why the VA loan exists, what it was designed and implemented, and what it does more effectively than any other mortgage out there is really important. You have to realize that veterans face a lot of hardships, and this isn't a pity party. I'm not asking for favor. I don't need any attaboys or thank yous or any of that kind of stuff. But veterans go through a set of circumstances that, quite frankly, is drastically different than you're going to experience unless you serve. Period. End of story. Right? Having to navigate paying a bill from 12,000 miles away where all you have is like 18 kilobytes of internet connection every 24 hours, right? There are different problems that we face as veterans, and there are different issues that pop up because of those. And that's a big reason why the VA loan was created, so that it would still afford those people that go through hardships the opportunity to become homeowners, and more importantly, maintain home ownership over a long period of time. And it's done that more effectively than any mortgage on the face of the earth, too, for what it's worth.
I think that's key too, right? Because I think, look, Chris, you and I talked about this, right? I think it's more important than ever as a loan officer in the environment that we're in, and probably how we're going to be moving forward a little bit, to really understand all of the products that are out there, right?
Yeah.
And to be able to your point, the why, but to be able to understand, like, when I'm with a borrower, a veteran that could benefit from taking advantage of a VA loan, you need to understand the ins and outs of it, right? Like, and I think there's so many myths and like maybe not factual things about a VA loan. What are some of those things that you see?
Oh God, there are so many myths surrounding the VA loan that are not substantiated in reality or fact by anything. I think, to your point, if you're a professional out there, a lot of people are having a hard time in this market, right? It's no secret. Companies are going under. There's more processing and operational talent and underwriting talent on the sidelines right now than there has been in the last 10 years, probably. It's a hard market to be in. And so how do you make it through and sustain yourself in a hard market? Well, you have to become very versatile. A lot of people use the saying master of sorry, jack of all trades, master of none, right? Finish the quote, but oftentimes better than a master of one. Too many people out there, professionals, get hung up in being great at one thing and not being versatile, not being incredibly well-rounded. As a Marine, one of the first things that you learn is that it's more important to be well-rounded than anything else, because of the vast degree of problems that you're going to encounter and obstacles that you're going to have to find your way over. And so being versatile is incredibly important. As a professional in this market, if you're versatile, you can capture a lot more opportunity that's out there with people that have unique problems. And no loan, again, offers more flexibility than the VA loan itself. So, we get asked all the time, well, how are y'all doing through this market? And it's like, well, it's not 2021 for anybody right now, but the reality is we're still doing great. Why? Well, a couple of reasons. Over 60% of the mortgages we do are VA loans. Veterans and active duty military members, more importantly, one thing to keep in mind is they PCS. They have permanent changes of stations. So every 2 to 4 years, they're getting orders dropped to them, and now they have to uproot their families, move across state lines, move to different cities to be attached to and assigned orders to a new organization, right? And so in that process, you have a continual need for home ownership to be occurring if they want to buy, if they don't want to live on base or they don't want to rent, right? And there are several of them that do that. But when you're working with a consumer type that constantly has to move, even in a market where it's not the most advantageous to do so, you're going to have a little bit better pull through of the consumers coming into your professional pipeline, right? Not only that, but when you do a great job for a veteran, veterans invented the whole word of mouth thing. It's passing gouge down. They call it different things, and scuttlebutt is one that we used a lot. It's how word gets past the Lance Cooley underground, that sort of a thing. But when you take care of a veteran, they're going to tell other veterans about you, and that bona fides that they're sharing with that other veteran is worth more than any of the marketing you're going to put out there.
So I'm going to rattle a couple things off to you, and you give me your input on it, right? Because I did some research on kind of like what I'll call myths around VA loans, right? Because I think part of it for a loan officer, and you tell me what you think about this before I rattle it off to you. I also think, like, look, we know we're in a purchase market, right? We have been for a very long time. I mean, 85 to 90% of the transactions that are being done right now are purchase transactions. in that the real estate agent and the listing agent certainly, they might not have complete control, but they certainly influence sellers. Let's say, for example, I list my property, and what contract am I going to take when I get conventional loans? I get a VA contract, and I get, a couple FHA loans, or contracts, I should say. I think there's just things around that influence, wrongfully so, because of what people might have think about this particular loan from 5, 10, 15 years ago. So here's the first one for you. You need perfect credit to get approved for a VA loan.
I'm going to answer your question. Let me preface this real quick. If you go to vetedva.com and you click on the little hamburger, the 3-line little menu deal, and you hit the drop down, there's going to be a report there called Debunking VA Myths. What this report is we use annualized HMDA data every year. Once it's issued, it comes out March, it's available in April or sometime in that period. We go through and we analyze it to attack a lot of these myths. VA loans are denied more often. VA loans don't get approved. VA loans are higher cost. VA loans require great credit in order to get through. Here's the reality to the answer to your question, John. The VA loan, as it pertains to credit scores, do you know what the minimum required credit score is for a VA loan?
You asking me?
Yeah, do you? Sorry to put you on the spot. No, I'm not trying to play gotcha or anything, but a lot of people don't know this answer, and that's why.
I'd say typically a score as low as 620 for sure. I've seen.
Yeah, there's not a requirement. Look in the handbook. There is no requirement. You have to have this FICO score is for the VA to issue the guarantee so that this VA mortgage can exist, right? So you have lenders that'll go down into the 400s, and we do loans in the 400s all the time. You can do, no FICO score loans with VA mortgages at the same time. VA loans have an easier process with those manual underwrites and some of those things as well because of how flexible they are in income guidelines, credit guidelines, asset guidelines, again, because they're understanding the unique identity and process that those military members go through. So when it comes to FICO score being a limiter, here's the biggest thing people run into. Lenders have requirements, they have overlays, right? I don't want to call any big lenders out with the name VA or veteran in their title. But part of the problem with the industry is a lot of these big lenders that have really harsh overlays that limit the product to 620 or higher don't tell consumers or the professionals that they're working with, the agents, that, hey, by the way, you can do this loan somewhere else, but we won't take anything below a 620. So it's them pre-screening the type of veteran consumers based around credit that they want to work with, not that they can work with, but what they want to work with. And they're impacting and causing people to believe things about the VA loan that simply isn't true. But the issue there is, you have a whole subset of the market, whether it's listing agents steering people away from VA loan because of something someone told them that they didn't actually know themselves, or even veteran consumers not believing that their VA loan can do something because something that a bad lender or a lender with a really harsh VA overlay told them, and they didn't tell them the truth. Probably not intentionally, but more likely because they just don't know. Where do people go to get trained on VA loans? Most people don't go anywhere, right? Yeah. It's an OJT, trial by error. And unfortunately, you're going to cause a lot of harm if you follow that kind of a process. So with FICO score, there's no limit. You can do them down low. They happen all the time. We regularly do them in the 400. So it's not a problem. If you have issues around that or you need help on that, we're happy to have a conversation too. There's a group out there on Facebook called VA for Professionals Only. This is a group our active duty moderators moderate as well, so that anyone with a VA question as a professional can get an answer to it, cited and sourced from the guideline it comes from.
Got it. Another one. Only combat veterans are eligible.
Yeah, I've heard that a couple different times. I'm not really for sure where even that thing came from. It probably came from a bunch of grunts that are, in the Marine Corps, you have grunts and something they call pogues, people other than grunts. So really two classifications of hard charging leathernecks out there. But it's simply not true. You can be an active duty military member, a reservist military member, National Guard. You can have any MOS out there. Look, even people with foreign service to other NATO nations can qualify for VA loan if they move here and become citizens. So there's a whole plethora outlined in the handbook and a couple of their manuals as well, as far as who can qualify for a VA loan. But that one's just simply not true either. Thank God, because I don't have my car. All the Marine Corps, all the Marine vets out there laughing. Oh, we got a hug with no car.
You can only use the VA home loan benefit once.
Yeah, so this one's actually pretty persistent in the marketplace, and I hear it stated by veterans and military, active duty military members, reservists, as frequently as I hear it come from agents and even loan officers. Right? They just simply don't know. There is no limit to the amount of times that you can use your VA entitlement. I've seen veterans with 3 or 4 houses on one entitlement as well, right? Because you have bonus entitlement, and there's a whole calculation for that. I won't bore everybody with going into it. It's not that hard. Divide, subtract, multiply, right? Anyway, but you can use the entitlement as many times as you would like to, as long as you're following the process of how to use it.
And Chris, you mentioned going, I think it was to vettedva.com, and there was a report. I think you said it was on the top right hand side. I think what was it called again?
Yeah, when you go to you'll see the menu. It's on the far right. It has the 3 different lines. But if you drop down to, if you click on it, it'll pop down and it says VA loan resources, and then debunking VA myths is the one that you want to click on to encounter a data-based analytical argument to a lot of the common myths that you hear in the industry.
Well, and I asked you that one too because I know we've talked about these next 2 before, and you have in that report, there is just a ton of statistical analysis that kind of shows that these next 2 aren't true. But I'll throw them out to you anyway, and you can kind of give your viewpoint on it. There's always the conversation that the VA appraisal takes too long, and there's always the conversation that there's unexpected out-of-pocket costs for VA loans.
Yeah, and so those 2 kind of a little bit different, but persistent. Let's tackle the appraisal one first. So appraisal data is a bit of a challenge to get because of the nature of how it's held. The VA holds on to all of that. The best source of information that you're going to get from there, John Bell has done a couple of different interviews with the head of NAR. The VA puts that information out at the lender conference every year. They talked about it this year. As it sets right now, as far as VA appraisals go from a time frame, they're a little bit faster than conventional appraisals and any other appraisals because, again, they're the only appraisal that have a required delivery date. As soon as that appraiser accepts it, he has 10 days to get the report back in. So, and it doesn't take 10 days nearly any time. Most of the time when you run into extended turn times, it's because you're dealing with an exceptionally rural market where there just simply aren't enough VA appraisers or appraisers on the VA appraisal panel, right? So as far as how those do, they have a pull-through rate and an achieving value rate when you understand Tidewater and the reconsideration of value at or above what conventional loans do. And they're also more flexible. We can talk about the specifics of VA appraisal if you want to on some of those. But as far as, they take too long, that's simply not true. And the VA put that out this year at the lenders conference, was the most recent citation of their data that I've heard on that. The second question, cost too much. VA loans cost too much. So when you go down to it's misconception number 2. Misconception number 1 has to do with denial rates and approval rates for VA loans. VA loans have the lowest denial rate out of any mortgage, and they are tied for the highest approval rate out of any mortgage as far as application to close. So, they're more likely to close than the other loans, just factually based off of hundreds of thousands of loans done and comparing and contrasting them. Misconception number 2 is VA loans are expensive for veterans. And so we look at this from a couple different angles. We look at it. So you can see total loans, average loan size, average CLTV, average net charges and credits, average interest rates, average discount points, average lender credits, average origination charges, average closing costs. And then we even look at rate spread on these things. And when it comes down to how do they compare and contrast, when it comes to the average interest rates, VA loans have the lowest. This is 2022 HMDA data, the lowest average interest rates of FHA loans, USDA loans, or conventional loans. It's roughly a 0.25% better on their interest rate than conventional loans were. When you look at average net charges and credits, right, and this is where we're taking the fees and then we're netting the credits to see where they come in. They come in slightly higher than USDA, but lower than everything else, right? As far as out-of-pocket costs or average net charges and credits the consumer's having to pay. So if someone's going to say VA loans are more expensive, then they're going to have to use data to prove that fact, because we have data that shows that simply isn't true. More than likely, they're working with a lender, one of these big ones with veteran in their name, that by process always charge an origination fee or always charge origination fees and add discount points on top of it because their par interest rate's already high and they're trying to skew what their numbers look like for veterans by taxing the veterans' pockets, right? And so more than likely, if you have an opinion that VA loans cost too much, You're working with somebody that it costs too much. It's not the VA loan. It's the person that you're choosing to work with.
Well, and you answered one of the other ones I was going to bring up, which is about the myth that VA loans have higher interest rates, right? And I think, obviously you just stated that's one of the things in your report that you were talking about. And I think if that is the case, there's a lot of factors to it. You've mentioned a couple of them, right? So yeah, you kind of hit that one. I always see stuff about like there's too much red tape involved with a VA loan from like a government perspective. What's your thought around that? I mean, I know that that's not true, but you're the
I
subject
challenge
matter.
anybody watching this that think there's too much tape around the VA loan themselves to come to me and tell me what they think comparatively there's too much red tape on. Because here's what's going to happen. You're going to realize the red tape that you're encountering has to do with the lender that you're working with and not the VA loan itself. The VA loan is the most flexible loan out there, right? So I don't even know what they would be referring to necessarily as red tape. You get during the appraisal process, you're like, oh, well, VA appraisals have problems, comping. Well, first of all, market value is market value is market value is market value. There's no different calculation to arrive at market value for FHA, conventional, USDA, VA, any of those. It's market value.
Thank
Here's what I'll
you.
tell you what stands out though. With a VA loan, if you don't arrive at market value because the comp properties there, the comparable properties don't support the list price that's trying to be sold at, the VA loan's the only one that prevents a determination of value before it's allowed to be argued against. So with a conventional loan, an appraiser is going to arrive at a value and they're going to make their mind up, their opinion up. They're going to send that report in, and now challenging it, you're going to have to show comps to get past it. Well, and it's an after it's been determined thing. With a VA loan, if it comes in underneath value because they're not comparably sold properties that support value, there's something called tidewater. And this is a requirement. As soon as the VA appraiser notices that he's not going to be able to achieve value because he doesn't have the comps to support it, he has to send a notification out to the lender, to the listing agent saying, hey, I'm having trouble arriving at value. Here are the comps that I'm using to get there. Do you have any other comps that support the price that you're seeking? And that is it's a part of the process. So you're not arguing against his opinion yet. He hasn't determined it. He knows that he has to validate his opinion of value. And this is part of the process, is getting more information from the professionals involved to make sure that he's considering everything that he ought to be. So let's say you go through that tidewater process. The comps aren't there to support it. Well, what do you do then? Well, again, a second thing that no other loan offers is called a reconsideration of value. And this is where the veteran can write a letter to the VA saying, look, I understand on this process going through the appraisal, we were short on value. Tidewater, we still didn't get to value. I'm in this market. I'm trying to buy a home. I believe the home is worth this because I'm looking around at everything comparable. And this one's in the area we need. It has all of the different amenities that we need to it. And I believe the home is worth X amount of dollars more than what the appraisal's showing. The VA can absolutely come in at that point and validate the value, even if they're not comps to support it. We get these all the time, reconsiderations of values. I've seen 20, 25, 30 grand where there's not a comp to support that value still be achieved so that loan can go through and that veteran can get in the home that fits their need.
Yeah, you know what, Chris, and I'll be honest with you, I don't know how many people know that. Yeah,
not
again,
enough.
You know what I mean? Those two processes, because you're right. Like, if you really stop, and that's why I was like, when you kept saying market value is market value, I was, and you got there, which was, and it doesn't matter what the loan type is, right? The appraiser is going out to determine the market value of the property. Yes, you have a contract and you have a willing buyer and a willing seller, but as you've mentioned, you got to have the comps that support that combined agreed upon price. In every other instance, it's a done deal by the time you actually see what the end result is. And now you're behind the eight ball trying to get people to do things differently than what they've already just done. Those two processes you just in Tidewater and then reconsideration of value with the vet to the VA, that does not, to your point, that doesn't exist. You don't have that flexibility in any other appraisal.
No, you don't. And there's even more than that. So you hear people say, wow, well, VA inspections are just too rough. Well, first of all, there's no such thing as a VA inspection. If you're out there and you think there's a VA inspection, you've been grossly misinformed. There is no such thing as a VA home inspection. You have a home buyer inspection that happens just the same as any buyer that chooses to have a home buyer inspection on the home. So what are they talking about? Well, they're misunderstanding something. When the VA appraisal goes out there, what do all appraisers do? All appraisers inspect for health and safety issues. Every single one of them, conventional loans too. And they all follow the same thing. Oh, well, we had to have a handrail because the VA required it. Well, guess what? Handrail requirements are a county-based or state-based issue. They're not from a the mortgage type, right? And so they become a health and safety issue. Now, what's different about the VA loan than the conventional loan or the FHA loan in this case? The VA loan is the only one that you can get an MPR waiver, a minimum property requirement, right? Is what the issues fall under typically that are found during an appraisal. And the VA can actually, your SAR can actually issue an MPR waiver so that if you have a superficial problem that's been cited as an issue by the appraiser, you may not even have to deal with it. The VA isn't concerned with a little bit of chipped paint on your siding, on your fascia on the outside of your home. They're concerned with things that relate to health and safety issues. So if the whole side of your house is peeling paint, right, and the paint itself is was it 72 lead-based paint? 72? I think it's 72. It's in the 70s anyway, somewhere down there. Chipped paint that has a potential to have lead in it is an issue because it becomes a health and safety issue. If it's post 72 and there's no lead in it and the whole side of your house is peeling, it's a health and safety issue because water intrusion could have occurred, which would have led to a massive growth of mold potentially. And that becomes a health and safety issue. And it exists on all of the loan types, but the VA loan is the only one where you're going to be able to get, oftentimes, especially for superficial issues like a little bit of chipped paint on your fascia, to where the SAR can write an MPR waiver and you can get past that without having to do anything. And in the worst case scenario, let's say there's a little chipped paint and you've got an appraiser and an underwriter, they're like, nope, this has to be fixed. Go buy some off-brand spray paint color and just tack some spray paint over it. And for, 8 cents a spray, you've solved the problem and it's over, right?
How about this one? Because I've seen this out there before, and I think there's a misconception that the veteran is limited on a VA loan on what they can do with their VA home loan benefits. Meaning, I think a lot of people have this misperception that it's only allowed to be used to buy a single family house.
Oh, yeah, that one's kind of silly too. You know how like.
Hey, we're just trying to get them out there to debunk.
No, I understand completely. And if you're watching this and you're like, wow, this guy's really animated and amped all the time. Look, I'm a Texan. I'm a Marine. And I like a lot of dark black coffee in the morning. So, yeah, I'm a little animated. I hope it doesn't hurt you too much. But when it comes to what you can do with a VA loan, you can do more than you can with any of the other properties or other loan types. Again, right? We have VA one-time closes on barn dominiums going on right now. We're building barn dos with a VA one-time close type loan. In 2012, I bought a short sale with chipped paint, holes in the stucco, like you name it. We even had to fix one of the structural beams underneath the house because it was a pier and beam foundation. Bought a VA short sale, right, with a short sale with my VA loan, right? Other loan types that you can do, property types, you can buy multifamily properties. You can do a joint loan and buy multifamily properties with even more than 4 units in it. You can buy single wide mobile homes. You can buy double wide mobile homes. You can buy chattel mobile homes that have been moved that you can't do with other loans. You can refinance a place. You can do something called an IRRL, an interest rate reduction refinance loan, which is a very quick twitch thing that doesn't require income or appraisal, right? It's just simply designed at a very low cost to get the veteran's interest rate down. It moves really quickly. You can do renovation loans. VA reno loans are pretty awesome. A lot of the properties that are out there right now, some people want to do some stuff to them, but they don't have the money to. Well, do a VA reno loan. And now you have the funds to tackle some of those bigger items that they might not have been able to get to otherwise. And I'm sure I'm forgetting some too, because there's just a plethora of things that you can do with a VA loan. It's more flexible as a loan type than the others.
Yeah, it's crazy though, right? How sometimes, as we talk about kind of, even though it's 2023, and I think individuals like yourself and vetted VA, and we'll talk a little bit about that here in a minute, and what that offers and what people should be, coming to that for. It's just crazy to me when you talk to like at a dinner party or you're out at an event and you talk to a real estate agent and you start hearing some of the things. You're like, I started in this industry in 94 and people were saying that in 94. Like, you would think there'd be more understanding. I mean, here's one, right? Like, the occupancy rule is too hard for active duty serving overseas. It couldn't be anything further from the truth, but people still reference that as like an obstacle in relation to a VA loan for an active duty, somebody serving overseas.
Yeah, I mean, I personally know an originator that got an exception, right, to allow a veteran who was overseas to not have to occupy his home for 6 months until he got back from deployment. The veteran spouse can suffice occupancy. The VA loan was created to allow veterans to buy owner occupied residences. It wasn't created so that they go out there and fudge the facts and say, oh, I'm going to occupy. And they'll always use air quotes. We're going to occupy the property, right? It's not designed for you to go out and buy an investment property with a VA loan starting out. That said, you can still get into investing with a VA loan by vacating a current occupied residence that you have. You can turn that into an investment property. You can even do an IRRRL on it after you vacated it and it's an investment property. You can buy multifamily property, live in one unit, and rent out the other units to people. That's a form of investing with a VA loan at purchase. Actually, you can even do something, and I don't like talking about this one because it's a property acquisition process that we currently have a company surrounding. But the VA, when they have their REOs, real estate owned, right, the properties that they take back through foreclosure, the VA sells those direct to consumers, right? They finance loans behind them. You can buy an investment property from Vendy, is what it's called, from the VA with 5% down. It's actually a little bit less than 5% down. I own 9 of them. 30-year fixed notes. The funding fee works nearly identically to how it works for regular straight leg VA loans, but it's a seller financed VA loan.
So, look, I think we go on and on about all these myths, right? You probably have another 20 off the top of your head. And how many's in that report in total?
I think we cover 7 major myths in this report because they're probably the most common 7 that are cited by, and don't get hurt by this if you're a listing agent, but by listing agents when they're steering their sellers away from accepting a VA loan. Like that's one of the biggest problems veterans have with getting their offer accepted. And one of the reasons why they get pushed into these inferior loan types with higher cost, higher interest rates. And here's a kicker too, higher foreclosure rates. Most people wouldn't believe it for an instant that a VA loan has a lower foreclosure rate, actual foreclosure rate, than conventional loans with 20% down. But go look at the data. It's there.
That's interesting. Hey, rattle them off real quick on your 7 so people know what they're looking at when you see them.
Yeah, cool. Let me start from the top. Scrolling. One misconception number 1: VA loans are denied at a higher rate than other loan types. VA loans actually have the lowest denial rate at 7.2%. Next to that, you have USDA and conventional at 11.2%. So conventional USDA loans denied 11.2% of the time. VA loans denied at 7.2% of the time. FHA 11.8%. Then we also go to the counterpart of that, origination rates. How many of them have pull through? The VA loan is the lowest at 69.4, and it's actually tied with USDA at 69.4. When comparatively, conventional loans, 65.9% of conventional loans are approved. Misconception number 2: VA loans are expensive for veterans. We beat that one up and nail it down perfectly. So there's really nothing left to argue on that one. Misconception, and we take that one through like 4 pages of analysis that like there's no way to argue that one. Misconception number 3: persons with weak financial backgrounds use VA loans and no down payment mortgages to buy homes. That one's simply untrue. The veteran marketplace is as eclectic as a civilian marketplace. You have veterans from all different walks of life that learn to work together. The reality is veteran homeowners are 18 times wealthier than average renters. We have that data in the report as well. Misconception number 4: FHA or conventional loans are better for veterans than VA loans. This one irks me a little bit because there are a lot of people out there that believe that. So we argue against that with several different things, from cost to likelihood to close to default perspective, right? Not only how do you get a borrower into a home, how do you keep them in a home? Because if they can't maintain home ownership, now it becomes this big negative that's going to take them 5-10 years to move forward and move past. The VA does that just simply better. Misconception number 5: VA loan appraisals are slow to process and usually come back with low values. We beat that one up a little bit earlier, but that information's in here as well as some of the citations from the VA themselves who track the data. It's not public. That's one of my wishes to them. If any of y'all over there see that, John Bell, if you happen to see this, we would love to be able to get the good news out for you, brother. I'm just saying, it's great news and we want to share it. Misconception number 6: sellers have to pay all closing costs. I don't know where this comes from. I think this honestly came from like a long time ago. I say a long time ago, 4 or 5 years ago. And it was even allowed then. But when the sellers thought that they had to pay for the pest inspection, it was like $150, $175. That's not true. Veteran can absolutely pay for it. There are no additional closing costs the sellers have to cover because they're accepting a VA loan. Misconception number 7, VA loan can only be used once. We break that down and show, the charges for using it multiple times, some data on how many times, people are using it on average and what they're purchasing with it. And I believe that, that's the last major
Yeah.
myth that we cover in this one. But
So
hey,
look,
if you watch this and you have any other myths that you have that you'd love to see incorporated into this from a data perspective, I'd love to hear from them.
yeah, for sure. Um, okay, so one more thing for you, and then I want to talk a little bit about what you got going on at Meta VA and what the whole purpose was and all that good stuff, so people understand. Because I think one of the things we've talked a lot about, right, is the education, and to me, that's where I think it's the lack of knowledge, the lack of understanding. Maybe I don't do VA loans that often. Maybe I've done one or two here or there. So I think it's important that people know where they can go to get, the resources, the education, the training. And I think you'll have some things to share with the group on that. But just as kind of before we get to that, the last thing I would have for you is if I'm watching this, right, and I've never originated a VA loan before, in your opinion, like what are the top 3 or 5 things that I need to know? Outside of like what, go get educated, right? Take some training. We'll talk about that in a second. But what are like top 3, top 5 things related to a VA loan that I should know?
I think some of the important things to know are the rules around credit score and FICO. That one's a big one for a lot of consumers. So understand the VA is incredibly flexible there. And if you're having problems getting a loan accepted by a different lender, maybe try shopping it to a different lender that doesn't have those same overlays. Understand that how most loans work, it's debt to income based as far as how you qualify. With VA loans, it's residual income. So how much money do they have after housing payment and electricity and those types of things for the house itself that determine, whether or not you can get it through or not, right? There's different rules that govern kind of that ability to repay piece as far as how income works with the payment on that. Other major entitlement, you really need to understand how basic entitlement and bonus entitlement is calculated. That's pretty simple. You take the county loan limit, you divide it by 4. If they have previous used entitlement, you subtract whatever that is, and then you multiply it by 4. That's what they can borrow up to 100% without having to down payment. If they want to go over that, they just have to have 25% of the disparity between what they can borrow 100% at and then what their purchase price is. So understanding how entitlement works, eligibility, that sort of a thing. And then a fourth one that they really need to know. I would say a fourth one, even if you don't know anything, know that you can go to VA Professionals Only on Facebook, and any issue you have, our moderators are going to help walk you through it. And here's why, right? If we can help you help another veteran, ultimately that's achieving our mission, which is to ensure that every veteran that's seeking to achieve home ownership is able to do so. We don't want you to be alone and by yourself. That's the worst place to be. Most loan officers feel like they're on Loan Officer Island with a lot of places they're at. You're not alone. We will help you. So make sure that you have an avenue to take those questions to. And then a fifth bonus one, understand that the VA handbook, get comfortable with searching out information in it. It outlines just about everything that you could want to know that prevents or causes an issue with getting a VA loan. So know that 26 Tax 7, the VA Lender's Handbook, does exist. It's available on vetva.com. It's available on va.gov, right? The VA puts it out there. And you have all of this information out there at your fingertips, literally, or at your voice tips. Like, hey, Siri, show me the VA handbook.
Here's what I found.
She'll help you too. So just don't be lazy. Make sure you seek out the information and don't never go based off of, well, so-and-so told me. Verify the information that's being shared with you.
Well, I think, look, that one of the reasons, obviously, there's a lot of reasons why I wanted to have you on today. With it being Veterans Day and everything associated to VA loans, like I said earlier, when I think of business partners that I've come in contact with over the years, you're one of the handful on one hand that come to mind on who I would talk to about VA lending, right? So that goes without saying. But I think a lot of what I wanted to kind of translate to is then arming yourself with the knowledge and the power to then have the conversation with the other people, if you're an LO, that are influencing the decisions, right? Like a listing agent or insert, other people that are influencing. So you can arm yourself with the knowledge and the data and the statistics to have an intelligent conversation and sway somebody's mind, right? And get them looking at it in a different factual way versus well, I've been I've been in the business for 20 years and this is the way it's always been, right? So we have to do a better job at our side of the house educating others so that it doesn't become an obstacle to home ownership. Um, talk to the group about vetted VA, Chris. Obviously, you started it a while ago. It is a tremendous resource for loan officers in the space that want to get educated on all things VA. I know there's hours upon hours of training and courses, and just kind of give in the end here, a little, kind of out there to what they can figure or what they can expect to find when coming to vetted VA.
Cool. So Vetted VA exists for one reason and one reason alone, and that is to educate people. We educate professionals, we educate consumers, and we make sure that veterans, military members, professionals serving them are aware of all of the things that they need to know. They've trained on those things so that when they run into an obstacle or when they run into the next thing that they aren't sure of, they know how to cure their uncertainty, right? They know what things exist out there and how to get through them so that you can go from an I don't know to an I do know as fast as humanly possible. Vetted VA has right now over 25 hours of unique education that we've personally created. We've poured more money, I bet, into VA training than any other company in the last 3 years out there, big or small, to include the VA. I don't think the VA has. It would be cool to see them get the funding that they need to build a robust training apparatus for all of the different professionals that work for the VA, or for VA, excuse me, to serve veterans and the different lenders and people that are out there as well. But our job, as we see it, is to cause you to fail. If you join our organization, when you're going through our training, expect failure. Failure is where you're going to learn a lot. You're going to learn a lot about yourself. You're going to learn a lot about the things that you need to know. You're going to learn a lot about how to fix the things that you don't know how to fix right now. Where do you go for this, or how do you find that, or how do you prove this after you found it, right? How to locate, close with, extract information, apply it, validate it, and then backstop it by process so that each time you reach an uncertain point, you have an exact process to rely on, muscle memory that you can rely on to cure your uncertainty, right? That's our job, to train people, right? In addition to training, we do something a little bit unique here. We hold all of our professionals accountable with something we call the VTB, or vet tangible benefits. You do a lot of FHA loans and you're like, hey, that sounds like net tangible benefits. Yeah, it does. And it's ours. So veteran tangible benefit form is our data collection process. So HMDA data exists out there, right? You're familiar with it. Most of the listeners ought to be familiar with it as well. But it exists to validate some of the information and identify problems that could be popping up. With data, because ultimately that's what you have to prove different issues or hopes and beliefs that you have. Well, the problem with HMDA data is it doesn't come out until it's over a year old, right? And so making it an active Intel driver is very difficult to do because it's all hindsight. So every one of our professional members have to submit at the end of each month all of their VA transactional data to us, which is tantamount to HMDA data. But we go a little bit further. We collect probably 8 pieces of information that HMDA doesn't, so that we can really get a full synopsis and picture of the activity that they're doing. In no way does it allude to or reveal the identity of the consumer or their specifics, but in every way, it does reveal the nature of the characteristic of the professional and the product that the veteran purchased from them effectively. And so we use that VTB information to ensure that our members are aware of how they're comparing and contrasting, to make sure that they can remain competitive on behalf of the veteran, and so that they understand what's going on in the marketplace, default rate, troop movement, consumer financial information. I mean, you name it. These VTB reports that we send out every month are about 36, 38 pages long, packed full of every bit of data that you would want to know about the environment that you're operating in. But we have a couple different ways that you can integrate with us. We have a reserve capacity, and then we have an active duty capacity. If you've been around for a while, you know the difference between theory and reality is usually great. If you've done a loan for an engineer, you know what I'm talking about. They live in theory, right? But the reality is, from theory to reality, there's a big chasm there. And so the educational platforms we have, the reservist-based training, walks you through a bunch of modules, basic Unix, practical applications, so that you get familiarized with all of the different things that you need to know about VA. There's a lot. We have over 18 hours probably closer to about 20 hours of these type courses. If you come into our active duty training capacity, this is where we take you from theory and we start to immerse you and expose you to experiential learning or reality-based learning. We have a veteran community. It's a private group on Facebook with about 75,000 veterans in it. They ask a lot of really good questions. They ask a lot of dumb questions. They ask some fraud questions. And in each and every scenario, it's the job of our VetaVA moderators, our active duty members, to encounter them where they are with the question that they have, with no judgment, with an explanation of how things work, why they're this way, a citation from the source to show and prove to them this is where it comes from, so that the veteran in turn, or the profession, or the active duty military reserve military member in turn, can make their best informed decision. It's their decision to make. It's not yours, right? And so your goal as a professional should be to educate them so that they can decide. So active duty membership is a lot more involved. It takes a lot more time, but it's also going to expose you to more than you're going to run into in likely a 10-year career originating VA loans. And I base that on my experience. I've done a lot of VA loans. I've been around a lot of professionals over time now doing VA loans. In 2021, we tracked, I think, a little over $1 billion in mortgage origination specific to VA loans just from our professionals, right? And so in all of that, I still run into multiple times a week new things that I haven't run into yet. There's a ton out there, right? And so being immersed in a community that you can learn from what others are going through, with a peer network, a group of people that are wanting to see you succeed, that'll take time to teach you and help you to get through those things. It's incredibly powerful if you're new or even if you're experienced in the industry, right? Surrounding yourself with people that have the same desire to be truly proficient at the art that they do for a living, which VA lending or any lending, I would argue it's more art than science, right? Exceptions are everywhere. Lenders are everywhere. Somebody will do it, right? And so understanding how to navigate all of that and being surrounded by people that do the same thing is probably one of the most important things out there.
Well, what was the give it again too in kind of closing? What was the Facebook group you mentioned again for people to go to?
Yeah, so resources real quick. VetaVA for professionals only. It's a Facebook group designed for any and all professionals. I think we even got some of the big name, I'm not going to mention any names on here, but the big name lenders that are out there. We even have some of their originators in the group that ask questions because they aren't getting the instruction that they need to, right? But it's designed to help you overcome issues for the veterans that you're serving, or the active reservist military members that you're serving. On top of that, we have our website, vetava.com. There's a plethora of information on there. We've created a home buyer guide that's probably, I would say, the best in the industry. All we ask is don't put it behind a paywall or a lead funnel type thing. Make it open and free. That's what we're about. We have information on there as far as common myth busting things. We've got an AI integration that you can ask questions to, a chat bot, and it's only information it's allowed to pull from is the handbook. So you can get quicker finding information in the handbook. Minority lending is a big topic right now. We just released for our first time this year, just before, I would say it was right there in September sometime, but a breakdown of comparing and contrasting minorities using VA loans to minorities that don't. Like, it's drastic. If you want to help a minority out and they're eligible for a VA loan, get them into a VA loan because they achieve home ownership at a much higher rate than any other mortgage out there with those products. What else? We have a podcast that we put out. It's available on all the big podcast platforms out there. Search VetaVA on it, and I'm sure you'll run into it. It's A Journey Home is what it's called. But we have professionals on there that encounter a lot of different issues. And if you like, learning while you travel, pop up a couple episodes on that are going to hit the topics that you want to learn on, and hear what professionals that do a ton of this are talking about, and learn from them. That's what they're having these discussions for. And I'm sure there's something else I'm missing because, again, we have a YouTube channel where we put a lot of content on it, right? Like any place and every place that we can educate, even on TikTok, we do. And with the one simple goal being veterans and military members pay higher costs, get into loans with higher likelihoods of default because us as professionals don't know the things that we claim to. Everyone out there on Veterans Day, happy Veterans Day. We're really grateful. Veterans don't even like hearing thank you for your service, if I'm just being honest, because we loved our service. It's kind of odd being thanked for something that you love. If you want to thank a veteran for their service, become proficient at understanding the product that's best suited for them, why it's best suited for them, and become capable of helping them understand how to navigate the different process that is the VA loan, so they can achieve home ownership with all the benefits that the VA loan delivers. That's going to mean far more to them than an empty thank you for your service. And not even an empty one. Like, I get it. If you really mean it, I run into a lot of those people. There's nothing wrong with it. I'm just saying, go a little bit deeper. If you really want to thank them for their service, learn a little bit about some of the things that they're entitled to, that you hold the doors and keys to the kingdom on, oftentimes because of the nature of your involvement with them in their housing journey, and help them out. Be willing.
Hey, we're stopping right there. That is an absolute great way to end this session, Chris, with regards to the challenge that you just threw out, right? And what we can do in the industry to help a veteran, a military individual with VA lending. That's a great way to end this segment, man. Hey, I appreciate it as always, brother. Thanks for doing this. Always great to have you. And like I said earlier, man, when I think VA lending, there's a couple people I think of. You're on the top of that list, so hence why I reached out to see if you could do this for us. So I appreciate it.
Absolutely. And thank you. And just to shout out to all the moderators, all the people that are a part of VA, we exist because of you. Without y'all, there's no way we could do and handle the capacity of work that we handle daily. And so I'm eternally grateful for the effort that y'all put in each and every day to prove your proficiency, to always be a student, to never stop learning. It makes the difference. Blessings, y'all.
Awesome. Thanks, brother. Hey, guys. You talk about somebody that's passionate about VA lending and serving the community and building the community and serving, our military men and women, and just the message, right? Like, I think it just, he embodies that. He breathes it, right? So that's the challenge, right? Can you educate yourself? Can you come be proficient? If you already are, can you take the challenge of being more involved to help others get more educated and get more proficient so that they can serve the community? And then ultimately, a couple different resources there, right? I recommend you go to Vetted VA. There are a bunch, as he mentioned, he probably forgot a couple. There are a bunch of resources on their site that you have access to, all around educating yourself on VA lending. So can't thank him enough for doing that. And hey, look, we got one more this year, right? It's next month. It is on December 14th at 2 p.m. We have the founders and creators of a company called Landis that are going to be with us. And I'm really excited about this one as well, because I think what it does is, what they do, right? They have a mission to help borrowers on their unique path to home ownership and creating generational wealth. And what they do is they bring a very borrower-centric, mission-based approach to helping people achieve home ownership, and a lot of instances in like a rent-to-own type of market situation. And they assist a wide variety of borrowers who currently that you may work with that are ineligible for a mortgage, which could be something like a deal save, like last minute type of situation blows up, the deal's going south, the loan's not going to close. They have the ability to step in, save that transaction through their product that they've created and that they're offering. Or it could be a situation where it's a non-qualifying type of situation where we have, a DTI issue, or, insert other things that you run into on a daily, weekly, monthly basis where, for insert the, whatever the issue is, the borrower or borrowers don't qualify. They have a very unique product and model and process that will still enable that borrower to get in the home today and then own it down the road while keeping you in the loop. So very excited about sharing that concept with you and having those guys come on and talk in December. We will see you on that date. And again, I wish everybody a happy Thanksgiving, safe travels to or anybody coming to you for Thanksgiving. As always, we appreciate the partnership. We know you have choices, and we love being part of your journey. So thanks for everything you do for borrowers out there, for the industry, and thanks for allowing us to partner with you. Until December, we'll see you again. Thanks.